Hi there. I'm Denise Laframboise. I am a mortgage broker, licensed in Ontario, and I'm the owner of laframboisemortgage.ca and a co-author in the Entrepreneur's Toolkit. So, in the book chapter, we actually share a lot of tips on credit to help self employed clients, which I'm not going to talk about today, but there's a lot of really good stuff in there in terms of thinking about what you need to do with your credit, what lenders are looking for. When we are self employed, we tend to buy a lot more stuff. Okay. And there's some unique things about how our credit is rated compared to, say, a normal employee. Because, say, if you take me, for instance, I am an incorporated business owner. So sometimes I have debts inside the business that only show up inside the business. And sometimes I'm a guarantor on those and they show up on my personal credit bureau. And so knowing what we're signing up for and where it shows up is really important to knowing how that's going to impact us on the mortgage approval side and how it's going to look in terms of credit moving forward when the banks look at us. So that there's a lot of good stuff in there. What I'm actually going to talk about today is just the mortgage piece because I have a lot of things I can talk to you about and they only give me so much time. So we're going to chat a little bit about mortgages and self-employed clients today. Whether you have a home now, whether you're thinking about buying a home or thinking about purchasing a rental property in the future. We're talking about residential mortgages today. And again, we could do a whole chapter on commercial mortgages too. If you have any questions about the credit stuff or commercial stuff or anything I talk about today, please feel free to reach out. Our consults are always free, and you can get a hold of myself or any of my team members at laframboisemortgage.ca. So I am going to share my screen here, and we'll get started. Okay, so mortgages for self-employed clients. So how many of you have been told or thought the following things? And you can open up the chat and we can actually go through this because I guarantee you these are things that I hear every single day from self-employed clients. So I can't get a mortgage because I'm self-employed. We're often told this, and it is not true. I can only get a high interest private mortgage. Again, we're going to talk about this today, but it is not true. I do not have mortgage options. Again, not true, right? But sometimes we're asking the wrong people. If I walk into my bank and say, what can I do? And they don't understand my finances or know how to work with self-employed clients, they may say no to something that actually, other banks can do. I might just be asking the wrong person in that scenario. And my accountant did my taxes wrong, and now I don't qualify, which we hear all the time because if we have a really good accountant, their job is to save us money in income tax. How they do that could impact what we qualify for on the mortgage side. This is not their job to know how mortgage qualification works or what they do, how that's going to affect mortgages. That is my job, but it is their job to save us tax. And if we have a really good accountant, sometimes it is going to impact what we can do on the other side. And that's sort of what we're going to talk about today at length. Right. So it's important for you to know that there's a lot of self-employed people and self-employment is on the rise. There are more people becoming self-employed since the pandemic than ever we thought we would see. And some of this is out of necessity, right? Because they've lost their jobs or they've had to find creative employment solutions to stay home, maybe to support a family member or kids or daycare's closed or whatever. And some of it's just like when we have these impact moments where, we realize we're not invincible, right? Life changed for a lot of people through the pandemic. You think, you know what? It's time to chase my dreams. It's time to, be self-employed and do what I really love. Because, it really is changing by impact because you look at the world and think, no time than now to do that. So we can all agree, I think, that there are a lot more self-employed people than ever before. So let's talk about me for a minute. So who am I? And why should you trust me? Well, I am an Ontario mortgage broker who loves helping self-employed people. Why? Well, because I'm self-employed too. And that means not only do I know how to read your business financials, but I also know how to position your mortgage request better than, say, an employee at a bank would, because I do this for my own mortgage too. I am on a mission to help self employed people understand their options for mortgage financing. And I really do thank you for joining me today. And I will be telling you about different options available for self employed people to get a mortgage. So that's a bit about me. And I'm actually really good at mortgages too, right? So we have all these awards that'll pop up here. Um, and why am I sharing all this information with you today? Well, honestly, um, this whole presentation is going to tell you how you can get a mortgage. And at the end, I'm hoping that you will want to get that mortgage through me and that you will trust that myself and my team is going to be best positioned to help you do that. If you're interested in our service at any time, you can go to our website or email or call the office there. All the contact information is at the bottom of the screen. And you can book an initial call or send us an application to get started so that we can chat about what specific options or things you have in place to qualify to get a mortgage so we can achieve your real estate dreams. Something else that's important to note is that we work with a whole bunch of different lenders. Okay, so 57 lenders actually is how many we have access to. And their policies and preferences are all different and they change all the time. So, this is one of the big benefits of working with a mortgage broker instead of an employee directly at any one of these lenders. There is a red logo you may recognize on the screen. And I can tell you that last year, they changed a policy so that you can no longer use line of credit money, so money from a line of credit for down payment. And so if you walked into that particular lender on the day that that changed, or the couple months that that had changed, and you said, I want to buy a rental property with my line of credit, they would have said, no, you can't do that. Does it mean you can't do that when every other logo on the screen could? No, it meant that we were asking the wrong person at the wrong time. And that's where we come into play because we work with all these lenders, we have access to all their policies, we know what is changing at each one. So often it is the case that certain lenders can do things that others cannot. And it does change over time because their policies and preferences do change. Okay. And so that's where we come in. And this is a really big benefit of having all of these lenders that we work with. So let's talk about the old school way of thinking, right? So banks are the only place to get a mortgage. Your relationship with the bank or the bank manager that grew up with your parents matters. That B lenders are very expensive, and that if your bank declines you, that you have limited options. This is a very old school way of thinking. Basically, when my parents wanted a mortgage, we didn't have all these fancy online reporting tools and access to electronic credit bureaus that were really widely used by a lot of different credit sources. And the decisions were more up to people like the employees at the bank or the branch manager than computer algorithms to determine if you qualified for a mortgage or not, right? There weren't, stress tests at the government level, but all lenders have to follow that said whether you qualified or not. Um, so basically, my parents would go into a branch that they banked at, and they would meet with the branch manager, who they may or may not have gone to high school with, and then they would see if they could get a mortgage. And a lot of it was based on relationship. And in their world, they either got a mortgage from a bank or they were told no. And their only other option was this guy. And Tony Soprano, well, he charges a lot higher interest and fees than what the banks do, right? But these were really your only two options. In the new school way of thinking, there are more self employed people than ever, every year. And there are lots of options. And planning and having the right team in place is key, right? And I don't just mean us. Yes, you need us. The mortgage broker is key, but also a good accountant or a good bookkeeper, or strategically what we're going to do with your finances is going to impact what you qualify for. So the new school way of thinking is that there are actually lots of mortgage options, and we work with 57 of them, and they all have different products and specialties. Okay, so there's all these other lenders that weren't there before when my parents were, looking at things. There we go. And so where did all these lenders come from? These additional lenders? Well, um, there's a lot of them that are actually B arms of already existing A lenders. So the A lenders we know, like the banks and the monoline lenders that deal with all of the lowest rate mortgages. They're actually B sides of their same business. Now, why did this happen? Well, it gets harder and harder to qualify for a mortgage each year due to government stress tests and rising home prices and more self-employed people and contract and temporary employment. And all of these lenders saw that their good clientele maybe weren't fitting with their banks anymore. And so there's a large opportunity for many of these lenders to find a place between an A lender and Tony Soprano, that place in the middle where they could help good clients, but use a different stress test and different documents to do it. Okay, and these aren't the only options. We have a lot of mortgage options for self-employed people, right? Because we specialize in self-employed, we have all kinds of creative insured products, stated income project products, what we call alternative lending, specialized small business owner programs, or specialized net worth owner programs that they really can fit into all kinds of buckets. There are a ton of different ones, and truly every situation is different. Like when we specialize in self-employed mortgages, we know that every situation is different, and often there's tips and tricks with different lenders that allow us to get approvals that maybe other people don't realize we can do. The problem is, like with anything, if we want to purchase a home, we actually do need to plan ahead. And when you're self-employed, that might mean planning how you pay yourself, or what you expense, or when you incorporate, or if you buy a vehicle, do you buy it personally or in the corporation? Like a whole bunch of other details too. So for this presentation, we're actually just going to keep this super simple. We're not going to look at all these crazy programs, even though we have a ton of different self-employed programs. I'm going to keep it super simple today, and we're going to look at the two most common options that we are weighing for self-employed clients when we're looking at planning ahead. So, and those two simplified options are A lenders and B lenders. So A lenders will look at you the same as an employee, and they may allow us to add back a small amount of expenses. So if we are a sole proprietor, we might be able to add back about 15% of the things you write off, depending on what is being written off. And that's where like the story piece comes in, and that we know how to look at your T1 generals and your statement of business account and really figure out, okay, what can we add back in to use for your numbers on the stress test? The A lenders, they provide best interest rates. And this is typically the only option you're provided at the bank that you've banked out your whole life on the quarter, okay? B lenders are looking at self-employed clients differently. So they might use bank statements, invoices, and other documentation to understand your business instead of just the tax documents. They charge a lender fee that's typically around 1% of the mortgage amount, and that gets added to your closing costs when you make a purchase. And they also typically have higher rates. Okay, so when we look at these two in a vacuum, we're like, of course, I want the best rate option. Um, but one of the key benefits of the B lender is that there's a different and more favorable stress test than what our A lenders can do. And so what I want to do today is break down what these things actually mean. What does it look like? So in real life, let's look at an actual case study. Okay, so when we're going through this, I want you to actually answer to yourself, do I want to be Joe or Jane in each one of these scenarios? Okay, so we're going to look at two self-employed clients. So both of these entrepreneurs have businesses making 200K a year. Joe's goal is to qualify for the lowest rate mortgage. He wants to go to the bank he's banked at when he was 15 years old, and he wants to get a mortgage there at the lowest interest rate possible. Jane's goal is to take whatever mortgage makes the best sense for her. She just wants to get a house, and she wants to get it as fast as possible. And so in this exercise, we're going to assume that she's going to stay with a B lender and Joe is going to be placed with an A lender. Okay. Another difference I have here is that Joe is a sole proprietor, whereas Jane is incorporated. Okay. These two things are looked at very differently because when we say we're incorporated, I basically am drawing a line in the income that I am making as my business and saying, no, no, that money is the corporation's money. It's not mine. So a key difference between A and B lenders is that often A lenders can only look at your personal income. So what you have paid yourself out of the corporation, whereas a B lender, like for me, they will look at what my corporation is making, not what I have T4'd myself from that corporation. Those numbers could be significantly different when we are qualifying for a mortgage. Okay. So the first thing we're going to look at is income tax. So I am not an accountant. So I asked our great accountants and friends at Your Bottom Line, who also co-authored the Entrepreneurs Toolkit book, to do some numbers for me. And here's what they sent. So basically, if both parties claim 50K in fixed expenses, then Joe is paying a total of $50,000 to the government in terms of taxes, right? Jane is only paying 22,000. So this is a big difference. But here's something else to think about is that Joe actually has paid himself, he has to pay himself this for 2 years in a row to qualify for the lowest rate A mortgage. So you can actually multiply this tax bill times 2. So he has to pay Ottawa $50,000 2 years in a row to qualify for the mortgage he's hoping to get. Whereas Jane is really just saving the most tax possible. Okay. So then we're going to look at down payment. So Joe can use less down payment when he buys. He can do a 5% or a 10% down payment if he qualifies to do the insured programs with either CMHC, Canada Guarantee, or Sagen. We do consider these special programs when we're doing a pre-approval, and we'll look at them in different ways. Like when self-employed clients, if you're wanting to make a purchase, we'll break down, okay, what do we need to do in order to qualify for these programs? But he definitely has those as an option. Jane does not. So Jane has to put at least 20% down, but B lenders are much pickier on properties. So it has to be a marketable residential property. If she is looking at a more rural property, if she's looking at more remote areas, if she is looking at a unique property, or maybe it has some like farm components on it or a commercial aspect to it, she may have less lender options, or she may need to require to put a higher down payment, right? So some of these more unique properties or rural situations, she might need 35%, even 40, 50% down to qualify for her mortgage. So whose down payment would we want to save for? Well, obviously, like Joe's going to have to put less money in to get into a house. So that is ideal, right? Here's something. So how much mortgage do they qualify for? Well, with Joe, they will look at his business financials and personal taxes for a couple of years. And in this scenario, it is likely that he will qualify for around $750,000 in mortgage money. Okay, but remember I said that B lenders can use different documents? For Jane, they would look at 6 months of business bank statements and a few invoices to determine that she can qualify for. And in this example, she's going to be approved for about $150,000 more than Joe. So for the realtors in this crowd, like, do you think that $150,000 makes a difference in what you can purchase? Yeah, absolutely it does. And when can they buy? Well, so for our friend Joe, depending on the product that he picks, he typically will have to show he's been in business for over 2 years. And that's usually 2 full tax years. So it's usually more like 3 years because he has to have 2 full tax year filings with CRA. Okay, so 2.5 or 3 years he has to wait before he can be approved for the mortgage that he wants, that low rate, low down payment mortgage. Whereas if Jane chose a profitable business, she can purchase in as little as 6 months. Okay. So what are the costs if they both got a $700,000 mortgage, right? So we talked about the higher closing costs and the higher rate with the B lender, but what does that actually look like? So let's say they both got a $700,000 mortgage. What would those costs be? Well, a B lender will charge a setup fee. So if Jane would be paying $7,000 more on closing costs. Although the rates are higher with the B lender today, they are relatively close when we are comparing fixed mortgages. But let's say like they're slightly higher. In Jane's case, she can obtain a mortgage with a 30-year amortization, and Joe will be limited to 25 years because he wants to do the low down payment, best rate insured program, right? So Joe will need to pay CMHC, Canada Guarantee, or Sage on default insurance, which gets baked into his mortgage. So he'll have some extra fees there. And Joe's mortgage payment will actually be $421 a month higher than Jane's. Um, Even actually, if we took the super low rate variable mortgages right now, um, Joe would still be paying slightly more than Jane um, on his mortgage payment each month. So that interest rate itself, it really isn't the only thing we need to look at. Now let's think about this. How much do home prices increase in the 2 years that Joe has to wait to buy a home? Right? Remember, Jane can buy in as little as 6 months. Joe's got to wait 2.5 to 3 years until he's got those two full tax filings, right? Well, even if we're very conservative on a number for a price, inflation per year on homes, Joe will be having to purchase a home significantly higher if he has to wait 2 years to qualify. Or by the time he is ready, he may be priced out of the location he wants to purchase in, or possibly out of the market completely. And it's not just that. Like, how sad would it be if, while Joe planned on his income for those 2 years, if the government regulations or rates or lender policies changed while he was waiting? Um, we have over 60 major mortgage regulation changes since 2008, including the application of the stress test. And we really could expect to see more changes as we go. And while we hope that they're all going to be positive, right? We always hope. Manulife Bank did a study that suggested as high as 72% of self-employed borrowers will default on their mortgage throughout and recovering from the COVID-19 pandemic. And if this statistic holds true, we could see a less favorable options for self-employed borrowers due to risk, and that can drive more policy changes. Okay, so we may see things where it is more difficult for self-employed borrowers to qualify. Right, so we need to think about these things. As we proceed too, we also should expect that interest rates likely will increase, and that government regulation and stress tests or whatever they're going to do, it's always a factor in what the mortgage market can do because our mortgage market is highly regulated and controlled by what the government decides is and isn't okay. So, with self-employed people, we really can, at the end of the day, be Joe or Jane, right? If we have the right guidance and we have a proper structure and time is on our side, we can prepare earlier. And we really want you to let us help. So, like I said before, you can always go to our website and hit book a call, and we can definitely do a chat through what your options are. Um, we can help you plan for a minimum down payment home purchase, or we can help you to qualify while saving the most tax dollars, right? Having those great accountants who save us the most money possible. The right direction can be different for each business owner, and it can be determined with a consultation by us and likely a collaboration with your accountant or bookkeeper. We are on a mission to help as many self employed people as possible purchase homes and maybe a rental property too, right? We're self-employed. We don't often have pensions. Sometimes buying a rental property or two can be a great way for us to build a pension that can sustain us in the future. If you would like to have a discussion about your specific business or your home ownership options, please go to our website and book an initial call at any time. And that's it. That's all I've got for you today. So I really, really thank you for joining me and participating in this and checking out our book, and all of the things that you are going to learn from this are going to be of huge value. There's some great entrepreneurs in that book. So again, the book is called The Entrepreneur Toolkit. It is amazing. It is short, quick chapters of things that all self-employed people need to know from local experts, and it is available on Amazon. So thank you so much, and let us know if you have any questions at all. We are always happy to help.